G'day taxpayers. Consumer sentiment down for a second month in a row after that pickup that we saw late last year. Consumers have returned to their pessimistic ways that the income tax cuts, the expectations for interest rate cuts are not enough to see that sentiment level maintained. And while we have sentiment higher than it was a few months ago, it's still clearly in the pessimistic range. So consumers aren't silly. They are responding to the fact that the RBA is squeezing the daylights out of them with oppressive interest rates. They know that wages growth, while it's positive, is not accelerating anymore. In fact, it's turning lower. And as a result, consumers are feeling just a little less optimistic, more pessimistic than they were a couple of months ago. So that's a sort of an interesting lead into what might happen to consumer spending early in the new year. Other second and third tier data that came out, job ads yesterday were pretty flat, continuing that slowing in demand for labour, yet to show up fully in the labour market numbers. We'll get a little bit more information later on about just how healthy and strong the labour market is. But if job ads are flat to down, and certainly well below the peak level that we saw a couple of years ago, businesses are saying that we don't need as much labour. They only say that if they're not producing or selling as many goods as they'd like to. So again, that slow economy feeding into the lagging indicator of the labour market. House prices continuing to ease. That we've got, halfway through January now, and it looks like Sydney and Melbourne prices are down month to date. So that's feeding into a national price situation where prices are pretty flat. The rate of growth of price increases in the boom cities, Perth, Adelaide and Brisbane, is slowing. So again, signs that that wealth effect might soon start to turn negative, even though housing affordability is improving. And the good old MI inflation gauge, my baby, confirmed that headline inflation's at 2.6%, so in the middle of the target range. So all up, consumers a bit gloomy, inflation on target, house prices declining, and job ads weak. So little snippets confirming the economy is kicking off 25 in a soggy state.